Welcome to John's Desk. In this video, I'm going to show you the 4 best electric vehicles ETFs that you can buy in the market. I'm going to compare their performances over the past years, their fees, their holdings, and the countries where they have the highest exposure. Let's begin. The first fund is the iShares Electric Vehicles and Driving Technology. It has a fund size of 595 million and a cost per year of 0.4%. Then we have Amundi with the Future Mobility ESG Screened UCITS ETF, 242 million with the cost or total expense ratio of 0.45%. XTrackers Future Mobility, 154 million and 0.35% of cost. And Fidelity Electric Vehicles and Future Transportation with 0.5% in costs and a fund size that I checked on their website of 31 million euros. So these fund sizes are all in euros. So let's check the performances real quick. As we can see here, the 1 year, the 3 year, and the year-to-date performances are relatively different for each fund, as you can see here. So the XTrackers in the past 12 months is up 22%, the Fidelity is down 30%, Amundi is down 8%, and iShares is basically flat. The 3-year performance shows again that XTrackers has the best performance. Year-to-date is the same story, and 2023 alone, look at XTrackers, 45% return. And it also has the lowest fees, so quite interesting performance there. The distribution of the dividends, they're all accumulating dividends, therefore you don't get them paid, they get reinvested automatically for you. Holdings, so this is the amount of holdings of stocks that are held in the fund. I'm going to show the top 10 to you in a moment. Fund domicile, this is important because if you live in Ireland, you don't get taxed twice for your dividends, lucky you. If you have one of those three, of course. And Luxembourg is the same story. And here we see the replication method. So iShares is the only one with the optimized sampling. So I guess they buy only a few of the underlying stocks instead of full replication. It means they buy probably the whole package underneath. Ticker, okay, this was interesting. Now let's look at the line chart first of all, because I want to get you to the point. In this chart we can see the differences in performances in 1 year in returns of these funds. And we immediately notice that there's something really odd going on here, because these funds are supposed to track more or less the same thing, but look at the performances here. So the worst fund is down 30% in the last 12 months, and the best one is up around 25%. So why is that? Let's have a look. In this table we have a breakdown of the 4 ETFs that I mentioned before. Let's start with Blackrock. The top 10 holdings out of 95 stocks compose 34% of the ETF. If you compare it with the other 3, that's the lowest percentage. Nvidia Corporation is the first one at 6.70%. So if you put 100 euros in this ETF, 6 euros and 17 cents will go to Nvidia. Then we have Eaton, Qualcomm, Garmin, ABB, Schneider Electric, Kia, Stellantis, Suzuki, and General Motors. So these are all quite established names in the world of electric vehicles and driving technology. And of course Nvidia, I think Nvidia is there because it has outperformed everything in this list in the past 3 years. Then Amundi, here we see again Nvidia making up 18.4% of this ETF. That's not necessarily good, because if Nvidia goes down, this will go down with it. Uber, again, really high exposure to Uber. O'Reilly, Tesla, Denso, Aptiv. So this is a little bit more electronic side of things rather than the automotive, but it is also called the Future Mobility ESG Screened ETF. So probably it makes more sense. It has less of the traditional players, let's say, in automotive. XTrackers. The top 10 holdings have a weight of 51%. And as you can see, there's 3 of the Magnificent 7 in this list. So we have Alphabet, Meta, and Nvidia, all there. And it also has some of the more established players in automotive, like Toyota and Volkswagen. The last one is the Fidelity Electric Vehicles and Future Transportation ETF. So this one has NXP Semiconductors, which is a Dutch company that builds semiconductors. And we have Infineon, Tesla, Uber, Aptiv, ST Microelectronics, which is an Italian semiconductor company. And all the way down you see Nvidia again. So Nvidia is in the top 10 in each of these ETFs in terms of holdings. Now what we notice, and that explains these crazy performances, what explains this massive difference in performance is the fact that these 4 ETFs, as you can read in the box below, these 4 ETFs are tracking 4 different indexes. So Blackrock is tracking the Stocks Global Electric Vehicles and Driving Tech Index. Amundi is tracking the MSCI All Country World Future Mobility ESG. XTrackers is tracking the Nasdaq Global Future Mobility Index, and Fidelity is tracking the Electric Vehicles and Future Transportation ESG tilted, always from Fidelity. So that's why these 4 ETFs have very different performances. Now I want to show you also the country's exposure. As you can see here, the BlackRock one is relatively well diversified because the United States composes only 28% of the stocks in this ETF. Then we have Japan, South Korea, Switzerland, Germany, Ireland. So these are all top-notch countries where to put your money in. And there is also Taiwan, quite risky, but it's there at 2.72. Amundi, as you can see, is really skewed towards the United States. So buying this index is betting big on the US. 58% of the money you put in will go to the United States. That's really high. And there is also Brazil in this list, which we didn't have before, and Hong Kong. But Hong Kong, which is technically China now, so we could put China probably at 4.68% in this, which will make it crack the top 5 in this ETF. So Amundi quite heavily invested on China, which has outperformed, by the way. If you look at the Chinese stock market, index is down by a lot from its peaks. So maybe could be a good time to start looking into China, but it is down for a reason, for multiple reasons, one of them being the political risks involved with investing in China. XTrackers, they're also heavily skewed on the United States and also on Japan. Look at it, 28%. So if you put 100 euros in this XTrackers ETF, basically 78% or more than 78% will go to the United States and Japan. So you're betting big on these 2 economies. Always remember that when you pick sectorial ETFs. These can really affect your performances in the long run. But this is also the ETF that has performed best in the past 2 years. So 2 years ago you bought this, you would be up 38% right now. So not bad. And then we have Fidelity. And Fidelity instead is more skewed toward the States again. Well, of course, the States, but also South Korea, and China is third at 6.28. I like to see the Netherlands in this list at 5.81 because the Netherlands have ASML, NXP Semiconductors. It is one of the countries where technology in semiconductor is advancing the most in Europe. Then Ireland, Germany, France, I think, yeah, it's only the 3rd time on this list. Japan and Switzerland. So this is the overall exposure to the countries. Based on all you saw in this video, which is the ETF that you find more interesting? Let me know in the comments below. Like, comment and subscribe. Cheers!